Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up. And this wrap-up is for Thursday. We're at the 25th of March, 2021. Interesting day. So we went through the event of the 7-year note auction. Didn't do anything to the market as I saw it. The event, of course, the first presidential news conference where President Biden had a set conference and took questions. What a different atmosphere than under President Trump, I think you'd agree. But are the problems changing? No. We still have everybody coming in over the border. You can call it any way you want. You can talk about how humane you want to be, but that's not the case. If it were the case and it were going the way that he said, I would guess reporters would be allowed, instead of into the cherry-picked holding area, they could go to the other ones. And as the president himself said, no, that's not going to happen just yet. There's reasons, and you know what they are. As for him getting through his, let's call it the initiatives for infrastructure, he made it pretty clear that there could be a big battle on filibuster if he can't get the Republicans to go his way. Well, let me think about this. The Trump administration was just the other side of that, right? The names are the same. You can't get the other side to get with you. Did anything really change? Different personality. I don't know how much has changed. So we'll take it from there. As you can see, GameStop up a pretty good move, $63 higher. AMC coming back. I thought $10 might be an area where the market looked for some support. It's got it. QQQ still a little weak. Now, I'm going to be rotating in these videos. I'm not going to always do the same charts. I do always the same charts, and 40 some odd of them, in my paid subscriber video. I know that word paid you hate, but it's the price of coffee. It's not that much money. And that is where I'm going to do those. These are the leaders into that, and I don't give you the meat here. I give you the gist of what I'm seeing. I say buy here, sell there, do this, do that in those videos. I'll stand by what I say. Do I lose? You can count on it. Do I win? I've been very lucky. You do have winners. You get both. All right. So in GameStop, you got down, didn't make it quite down to this point in an oversold condition. The goal was, could you get down there? It doesn't have to hit it. And the market gave a lunge to the upside. So now I'm going to look for resistance right here at the 192.50 area. I think the market, if it gets over 227, would be making a statement that it's got a trading bottom low and then a higher high. It would go into a trade pattern. Right now, I would not be surprised that the bears step in front at 192.40s and try to sell the market with risk over that number. The problem they have, and it's a big problem, is you're oversold. I don't think you get the real pro doing that in an oversold condition. In AMC, well, you've been fighting now 3 days in a row at that 10.90 level. That's why I said $10. It's right at that number. That's the line in the sand. Markets often go there to figure out what to do next. The market had a heck of a ride, if you think about it, to the upside. It went from, on this break here, roughly $6. Got itself up to 14. If you divide that, what do you have, an $8 difference? You come back to 10, half of that range, and that's where you're coming up with that battleground. In PAVE, all you had to hear is President Biden say he wants to get an infrastructure package through. As he was talking, I had my eye on this one. It just moved out to the upside. And as you can see, if you put on the swing lines and all now, the pattern is up. So until today's low is taken out, you created a new pattern. If I take away today, you had a pattern of lower highs, lower lows. With today, you first went down, made the lower low, then up. That gives you an outside day up. And your apexes are you've got higher lows and a higher high. So the market instantly on the swing line turned bullish. Battleground number, it's right here. You're fighting at the 18-day average of closes. The bulls have wrestled control from the bear until and unless you take out, over the next 2 days, 23 40. If you take that number out, then I think the bears grab control back in the market. If they do, all I think they're looking for is 2290. If the bulls have grabbed control of the market, I wouldn't be surprised if right in this area you make your run. Could it reach the upper Bollinger Band? Very possibly. I say that run that I pointed to in here because that's the high that the market recently had. Sometimes you don't have the power to go right through that. In terms of momentum, you don't have all three elements pointing up here. You've got momentum pointing down, you have the bias up and the swing line up, two of the three. That's not the whole thing. THCX continues to sink slowly. I wouldn't be surprised if you end up fighting a battle at the 18-day average. It didn't act like it wanted to hit. In fact, it didn't hit the upper Bollinger Band. It did back here on this washout. I don't know if it's got enough power to wash out to that number again. I'm thinking right in here the market's trying to look for its support. The bears are in control. Momentum is down. Bias is down. I wouldn't be surprised that they're taking some money off the table against that. That's where a window envelope comes in, by the way. For those of you that take my morning videos, I discuss window envelopes. You don't always hit Bollinger Bands. Window envelopes are another vehicle sometimes in front of them that you pay attention to. That's what I think it hit. It's a standard deviation away from the 18-day average. And the market sets them by, I developed it with the swing line as to what they're doing, and I found that I'm very comfortable with it. So I'm looking for the support there, but I think the willing sellers are still at 2032 with stops over the recent high. SMH is not in a trend. You have a higher high, a lower low, support at the 100-day average down to the lower Bollinger Band, but nothing to play. You just decided to go wishy-washy here. We know we have all the semiconductor problem. We know that some of the ships that are waiting to get through the Suez Canal, they might be even containing some of them. I don't know. But trying to just make up that shortage can't be done. And that is the big problem. And that is affecting markets in the commodity area as well, because if you can't produce a finished car or more cars, let's use that term, you don't need as many of the platinum, palladium, catalytic converters, and so on. That's the problem. XLI, the industrial sector, battlegrounds the 18-day average. Now today's low was 93.95. So you made a low under this low. Prior to that, you had a pattern of lower high. No, you had a lower low and a higher high. You don't know what today was going to hold. As it turns out, the outside day up doesn't give you that. It just gives you an apex high, and now you got a lower low that closed higher. You're in the middle of nobody's land. Momentum pointing down, bias up, and no trend. In XLE, the energy sector, I think a tip-off would be the market's gotten a bit too cheap if you can get back over 49.69. That would break the pattern of lower highs, lower lows in an oversold condition that got stretched out. That's what I'm seeing right here. I think the bears are now on the defensive. They don't want that to happen. Notice that they've not been able to get prices to that lower Bollinger Band. That's interesting too, but that is a target. But I don't think they'll let go of that pattern. I don't think they'll let the market get through that. SPY, bringing this on now instead of QQQ for a little bit. You can see that you've got lower highs, lower lows, momentum had turned down, it never did embed, and the battleground has been now for basically the better part of a week right here. Do I think the market's going anywhere? Well, on the close at least. The bias is up because you closed over the 18-day average, but it would not surprise me that the bears were selling against that 18-day average and have to have stops over that, I think, 394.07 area. They don't have to do anything. I say that, but that'll break their bearish pattern. And if they can regain control, maybe they can get it back down into the Bollinger Band. They have momentum going their way, and I think tomorrow's going to be a very important end-of-the-week number. When we come to emerging markets, they're still bearish. The market doesn't seem to want to add legs to the downside. I pointed out to you that I think it's basically a sideways chart. And you get these spurts to the upside, doesn't quite hit a Bollinger Band. You then ended it with a down spurt, not going there. I don't see anything here. I like the longer term charts over this. In the gold market, well, today's one of those days where you had an outside data to the downside. Look for the battleground at 161.50. The problem is, if you take out 161.59, and did you? 161.32, you now don't, it's just a question of, will the 18-day average hold? You're not in a trend. You have now a higher high and lower low in a very overbought condition. I think it's an ugly chart. In the gold miners, are you going to sink further? Well, if you do, the Bollinger Band's certainly a potential target. To break the downtrend, you got to get back over that 33.96 level, and bears are in control. They have to defend their 18-day average of closes to keep it at this point. TLT. When we talked last, I thought the pros would come out in front of the FOMC meeting. They did. The market's up to the 18-day average. It's trying to restructure. What is it going to do? I've come to the conclusion for my analysis that that surge that we saw in the 10-year note has probably run its first part and peaked out in that low 170s. I'm going to guess that in the neighborhood of 1.5% is the bottom, and we're going to trade in a range there as the market's going to consolidate. I am not convinced that there's not more downside. The Fed has just basically said whatever the back end of the curve yield does, it does. It's concerned with the front end, which is not the 10-year, and there's a lot of spending coming about here. So we'll see what happens. I think interest rates would not have the biggest problem going higher if COVID were not the issue now. Last, in the euro currency, first challenge of the lower Bollinger Band. In unison, what do you do the first time you hit that number? You got it. So, as you can see, I'm making little changes, and I'm going to do more of them now. I want to make these videos very interesting. These are not meant to be what my subscriber video is. Those are consistent. Those are going to give you all the different stock indices. They're going to cover BND. They're going to cover all the different parts of the markets, and I love to add to it. This has got to be a little shorter. It's the intro, a feeder, so that I can get the subscribers onto the site. That's where the meat is of what I really do. In the meantime, just go to our website, www.iraepstein.com. You can read all about it under the word research. Take care.